Hi, everyone. Today, let's talk about some technical analysis as well as potentially day trading or swing trading with options. For these examples, I'm going to be using Tesla because that's the stock that I've been focused on with this strategy, and it seems to be working fairly well. I'm going to start on the daily chart and then I'll move into some of the shorter time frames to help understand how I'm making decisions. Then I will talk about a few of the trades that I made here recently as kind of a trial run of this potential strategy. If you like trading stocks and options and making money, definitely like and subscribe. This video is a little bit different than the ones I normally make, so definitely comment down below if you like this kind of content so I know to make more. Welcome to the Portfolio Bulletin. Let's get started. Starting from the very beginning here, in March of 2020, you can see we had some pretty small interactions at this price level. Then moving forward here, we had two interactions here in April. And then this trend line becomes pretty firmly established here in July as well as August of this year. And this is the daily chart. So this becomes a pretty strong trend line over time. You again see interaction here in September, and then later in September, all the way out to October and then November. So this trend line that became established a little bit here in April and then pretty firmly here in July became a very strong buying opportunity in August, September, later in September, October, and then November. So if you did some of this trend analysis earlier, which I did not, you could have been making some pretty strong gains if you were just buying along this trend line and selling whenever we got pretty decently off of it. And the largest trade would have been here in November, rallying from around $400 per share all the way up to $900 per share. Of course, if you were holding this the whole time, you have some diamond hands, and this would have been an extremely difficult trade as it rallied over 100% during that period. Another thing that I use for trading is the 9 EMA, which is the blue line, and then the 30 WMA, which is the red line. And generally, whenever the blue line is over the red line, you want to be trading to the upside, and whenever it's below, you want to be trading to the downside. Of course, you have to be a little bit careful. For example, right here, whenever you get pretty far off of that blue line, you tend to get overextended, and you will get some kind of reversal. You can see an example of that right here in July, another example of that in August, here in November, as well as December, and then another one here in January. Whenever that price action gets pretty far away from where the WMA can keep up with, you're going to see some kind of retracement, at least eventually. It's not always to the downside here. You can see we were very extended here in March, and we did retrace all the way back up to the WMA. And another way you can use this is if you see an overextension and then a retrace back to the vicinity of the WMA, and you have a pretty solid downtrend here. So you have the red over the blue, and then the stock retraces up to where the blue line was. This is another opportunity to enter the stock to the downside. Remember, red over blue means you're selling, and then this stock retraces to that blue, giving you a selling opportunity here. Another thing that I like to pay attention to is the distance between the blue and the red lines. If this distance is pretty overextended, and then you get a retrace, it seems to be more likely that the trend is going to hold. And you do see that here. So the stock retraces all the way up to the blue line and actually comes up to the WMA up here. But this gap here is pretty wide. I know that's a pretty vague term here, but for me, when I look at this, I think that this is pretty wide. And I expect this trend to hold and that the blue line is not going to cross over the red line in this case. Of course, we had a little bit of a trend line established here, and this gave it further resistance at this point to the downside, which actually generated this longer term trend line, which gave us another pretty good trade here to the downside. So the stock ran all the way up to 700. And if you shorted the stock, you could have traded it all the way back down to $600 per share, which was another interaction with this longer term trend line that had been established for the last several months. Another thing that I was looking for here is once we established this trend line up here from the previous highs, and then we had this support level here previously established in December where the stock came up, was rejected back down to the blue line, came back through that price level. It just so happens to be right at the whole number of around $600 per share, which does seem to be pretty standard. Stocks like to react around those big whole numbers. Came all the way through it, retested this level. You can see it stopped right here on the daily chart and then continued on its rally. Once we had this topping formation and we had clear resistance here at around $900 per share, we went sideways for a while, and you can see this blue and red line getting closer and closer together, not like we saw over here where it was wide and then tried to spike up through. But when this gets closer and closer together over time, I do expect this generally to hold once we get a crossover. And sure enough, that was the case. And then we started that retrace that we had from February all the way through March. You can see we had our first leg down all the way to pretty close to that initial support level, retraced back up as I already mentioned. It seemed like we might get some support here in the 650 range, bounced back up to the blue line, giving another selling opportunity. And then we went straight down for 5 days, all the way to that longer term trend line. It depends on your opinion whether you can say that this trend line held here. We did have a full open and close below that trend line, which generally means that that trend line is broken. But we did open on the next candle, the next day, above that trend line and then rallied from there. So this is up to you how you want to determine if this trend line held, or you can just say we came into this lower support line and then retraced from there. And then we have a clear retest of this $600 level and then a breakout above this shorter term trend, which generally means we could be re-entering a bullish pattern here. You can see these trend lines are coming closer and closer together, kind of similar to what we had here, which means we could be re-entering a bullish trend on the daily chart. It's also worth looking at the weekly chart here. You can see the blue is continuously over the red for Tesla. So that still indicates to me that there's potential that this is going to retrace to the upside. So if you're trading on a longer time frame, for example, you plan to hold this trade for weeks, generally you want to trade on the weekly chart and you would be looking for entries down here and looking for that upside in the upcoming weeks. But that's not really what I'm talking about here. Usually I'm talking about either day trades or maybe a short few days of trading. So taking a look at the 4-hour chart, which is generally where you would be trading if you're talking about shorter term trades like day trades or swing trades, this is where I'm generally making decisions. So you can see the red over the blue. We do have that bearish trend, which held up for several days. If you are selling call credit spreads during this period, you would have made quite a bit of money. And even here, if you started selling some put spreads, once we got the crossover here, you would potentially be making some money in here as long as you're selling on these lows. As I mentioned, you're waiting for the retest back to these blue lines, potentially selling a put spread, and then we get that upward price action. But remember, you're bearish on the daily chart, so usually you don't hold those counter trend rallies very long. You would want to make those generally shorter, and then once we re-entered this bearish trend in line with the daily chart, you would definitely be making some money in here. And then we get the crossover again on March 31st. And we've been going sideways for a little bit here, so it seems like we're going to be re-entering the bullish trend alongside of the weekly chart. So it pays dividends to understand the time frames above and below you. So the weekly chart is still bullish with the blue being over the red. The daily chart is still bearish, but the 4-hour chart is bullish, which means to me, most likely that daily chart is going to flip to bullish as long as we continue to go sideways here, eventually breaking through this shorter term trend line. And then you can see another example of what I would call overextended here. The 9 EMA was still sitting around 650. The stock was sitting at 680. So we were around 5% off of the 9 EMA. And then we had this short term resistance line here, which gave us basically 1 day of downside and a counter trend rally on the 4-hour chart. But remember, that was in line with the daily chart. Of course, this is all in hindsight, so you have to try to understand how to make these decisions in real time without being able to see the future. So let's take a look at this starting from the previous highs here. So you can see we get a little bit of overextension. You could have tried to take this trade. If you did a shorter term put credit spread and you got a good entry, there was potential to make some money in here. But really the better trade is when we came up to this resistance line previously established and you're almost retesting that WMA. And the red is over blue, so this is going to be the better trade here on the short side, which did pan out. If you're a little bit more aggressive on the entries, you could have entered again when the 9 EMA was tested, which would have been a successful trade. And then we gapped down, massively overextended here. You can see we touched all the way down to 622 when the EMA was all the way up here at 720. So we were 100 points off of that WMA, which is obviously very overextended. If you sold any kind of put credit spreads in here, you would have made some money. Again, we have a retest of the WMA. You could consider this pretty wide here. So you would be selling call credit spreads again successfully. We have another retest of the red line here. If you entered at the red line, you would have had to hold through a little bit more bullish price action. And if you did hold, you would have been successful, as the stock eventually reversed in line with the longer term trend. Here, there would have been some potential to take some losses. This is what I would call pretty wide. And then we came up and blew right through that WMA. So if you sold call spreads in here, you would have taken some losses based on my strategy. And sometimes that's going to happen. Over the long term, this seems to be a pretty beneficial strategy. But this is definitely an example right here where there is potential to lose money. Then once we get that crossover here, you're now in a bullish bias. You come in and get the retest of the 9 EMA. You sell some put spreads and you get a rally up from there, understanding where your previous resistance is and looking for an exit somewhere in that vicinity. And then this would be another difficult trade to take here. So you have the blue over the red, but you're at this resistance point. So the signals are not pointing in the same direction. And if you're ever not sure, just don't take the trade. Take trades that are more highly probable. And in this case, you get countervailing signals. And to me, this is not a trade that I would look to take. Most likely, I would be looking for the trade a few days later when the blue line is fully established back below the red line. We're very well up over those lines and we're hitting that resistance line up here. This would be a place to sell credit spreads somewhere in this area. As I mentioned, we have blue below red, and then we have that resistance line giving us some bias here to the downside, and then that would have been successful. Here's another opportunity where I actually lost some money. I did expect this trend line to potentially hold here, or if we broke through, I would expect a retrace fairly quickly. But we had a pretty large breakthrough here, and I will talk about how I managed that in the next section. And then during this portion, once we got up to this resistance line, I did sell some credit spreads and made a little bit of money during this downtrend. Again, what I would consider overextended, around 5 to 10%, in this case around 5% above that blue line. So let's talk about some of the trades that I actually made. You can see I sold a put credit spread, 605 to the 600 for $2.25 here on the 30th of March. And I closed that here for 19 cents for a profit. Next trade was call credit spread for $2.35. And then I closed that for $3.06, representing a little bit of a loss. Had another one here at $2.33. And I closed that at $2.89. Sold another call credit spread here for $2.40. Closed that for $1.50. Then another one here for $2.54, and then close that for 41 cents. So I built the list of trades that I made here, and we can look at exactly what time I made them and what time I exited and what the prices were. So first trade here was the 30th at 9:32. And this is Central Time. So going over here to the hourly chart and the 9-hour candle, we had a pretty strong break here. And something I didn't mention here is if you do have a very sharp change in the 9 EMA, this could potentially represent a change of direction, and I did expect this support line that I mentioned before to hold. We had come into it, rejected here on the 25th, rejected here on the 26th, again on the 29th. We came in and retested here on the 30th, and sure enough, it did hold from that point. So you can see I entered the 650 to 660 put credit spread for $3.35, and the expiration for this was the 1st. And you can see after I entered that trade here during that 9 o'clock candle where we had that sharp change of direction, as well as the support level here that I was risking off. You can see it's right at that 605 level. We rallied all the way since then. And then the next day I closed it at the open, which was right here in this candle. And I took basically a max profit here, $2.16 or $216. And then I thought we were getting a little bit overextended here pretty shortly after. And I got short up here at 655 to 660. We had a little bit of a down move, but it continued up through that position. I tried to roll up here, and you can see I rolled up to the 625 to 675 put spread for a loss. So I closed that previous position for a loss at 71 cents. And then it continued to rally up. I probably should have held this position as we ended up finishing the day basically right where I said it would. So I could have closed this position probably for a smaller loser, but I ended up losing around $120 on that day. And then the next day I sold some credit spreads up here from 682.50 to 687.50, and the stock retraced all the way back down here on the hourly chart. You can see this is a clear overextension well off of that 9 EMA, where I took a 90-cent profit or $90, and then I tried to roll down, not very efficiently. I ended up getting filled way down here at 675, 670 for a $2.50 credit. All the way down here, not a great entry, but I did expect this to continue down, which it did do, but it chopped around in here for a while. And because I didn't get a very good entry, I almost closed this for not as much profit as I should have. But fortunately, in my case, the stock did continue down. And really what I was betting on was the fact that the 4-hour 9 EMA was going to be the support line, which is exactly where the stock ended up finishing, right at that 660 level. So even though I got a pretty bad entry on the hourly chart, I was correct using the 4-hour chart for my stopping point for this counter trend rally. And I was fortunate to take a $2.13 profit there. I probably could have closed this for a little bit more profit, but because of that chop action that I had on the hourly chart, I didn't want to hold on to the stock too much longer. And at this point, I had gotten most of my profits. So in these 2 days, I was profitable on 3 trades and lost money on 2 trades, which is about right, pretty close to that 50-50. But the way I managed those trades turned into almost a $400 profit. And this is really the benefit here of trading options. Because I'm selling credit spreads, I don't have to take a max loss, but if I'm correct, I can almost get to that max profit. So I'm taking 50-50 trades here, where I'm taking almost 50% credit. This is a $5 wide, so it takes $500 to do this trade. And I'm getting a 235 credit, 235 credit, 233, 240, and 254 credits. So I'm getting basically half of the spread in credit, so it's a 50-50 trade. If I'm correct, I take almost the full profit. And if I'm wrong, I can usually get out for a smaller loss here. As you can see here, 50 cents and 71 cents. And then my profits here, $2. This one was a roll down, so I didn't take full profit there. And then the next one was a full profit at $2.13. So if your losses are smaller than your gains, generally you're going to be profitable, even if you're wrong 2 out of 5 times. So this was a ton of content. And if you're not familiar with any of these concepts, it's going to take some external research on some of the things that I talked about. Understanding what an EMA is, as well as a WMA, understanding candlestick patterns and what they are exactly, as well as the hourly, 4-hour, daily charts, as well as the weekly charts. But research some of those concepts and then watch this video a few times. I think it will be very beneficial if you're going to try to day trade or swing trade with options. Definitely throw any questions down below and I will answer them. If you like this kind of content and want me to do more of these shorter term options videos, definitely comment down below and let me know if you want to see those. I do plan to continue this strategy and see how well it works. I have been paper trading Tesla for a few months at this point. So what you're seeing is not just a couple of days of trading. Really, this is a couple of months of research culminating in a couple of days of trading. And it's certainly not simple, but if you're dedicated, I think most people can understand the concepts and put it into practice. Definitely like and subscribe if you got any value out of this video. Of course, none of this is financial advice. This is all for entertainment purposes, and have a great day.